Guys, good morning. Guys, so let's move towards today's session. Yeah, Bushra, good morning, ma. Welcome to the session. Radhika, good morning. Sai Sagar, namaste. Kaluri Aravind, good morning. Yeah, Hindusha, good morning. Chalo, moving forward to the session. A, to whom 200 shares of rupees 10 each were allocated at the par, paid at premium, rupees 3 on application received, rupees 3 on allotment received, but could not pay the first and final call of rupees 4. His shares were forfeited by the directors. The amount to be credited to the share forfeited account. Guys, is my screen is visible and my voice is audible or not? Please let me know. Sagar, you can share this link to your friends, ICFI friends also. ICFI friends also can join, which is really helpful for their semester 1 and 2, which includes the company's accounts. This session is really important. You can share this link to your friends as well. No worries. Sagar, yes. Yeah, Harshita, hello. So moving forward, A, to whom 200 shares of rupees 10 each were allocated or allotted at the par, paid rupees 3 on application, paid rupees 3 on application, paid rupees 3 on allotment. So what is the total amount they have received? So 3 plus 3, 6. 6 on each share, right? But could not pay the first and final call of rupees 4. Could not pay the first and final call of rupees 4. His shares were forfeited by directors. Forfeited. So forfeited is nothing but cancelled. Forfeited is nothing but forfeit. That's okay, Sagar, but which is really helpful for further exams as well. You can ask them to join. No worries. No worries. This is a very important topic, useful for the lifetime, man. No worries. So the share, try to understand. Each share we have 6 rupees we received towards each share. So to whom A we have allotted 200 shares. So what is the total value that we have received? 6 into 200. That is 1200. Yes, 1200. But could not pay first and final call of rupees 4. They cannot pay. So we have cancelled the directors have cancelled entire shares. So whatever the amount that we have received towards cancellation of shares, that will be transferred to the share forfeited account. So what is the value that we have to transfer? 1200. Yeah, Punita, good morning, ma. Moving forward to the next question, next session. So which of the following is not the capital receipts? Capital receipts. So try to understand, guys. Receipts are two types. One is capital receipts and another one is revenue receipts. So sir, what is the meaning of revenue receipts? So revenue receipts are those receipts. Revenue receipts are those receipts which will be received from ordinary transactions, ordinary day-to-day transactions in the business, or day-to-day investments, So capital receipts are those receipts which will be received only only at the single point of the time, or only once. So generally the capital receipts are like, whatever the receipts that we have received towards a kind of expansion of business, or towards internal reconstruction of business, or towards the changes in the composition of business, or whatever it might be. So in that scenario, the capital receipts will be comes into the picture. So capital receipts is asking us which is not a capital receipts, Here, what does it mean? Which is not a capital receipts? Receipts from sale is not a capital receipt, since it is a day-to-day operation. Fees received from services, which is a day-to-day operation. Interest on investment. See, this interest will be on the regular basis. It will be what is it called as? It will be always continuous and during a period and all the way. Since 3 are right, option D, all the above is right. So yeah, Akshay, good morning. That's okay. So Sai Sagar, well done, good attempt. Yeah, Kasturi, good morning, ma. So kindly subscribe the channel and type on the bell icon for the more updates. So like and share the link to your friends as well. So which is really helpful. So which of the following are the real accounts? Try to understand. Real accounts. So we will be going option wise. Real accounts, which is real in nature, the items comes under real accounts. So try to understand. Salary is an expense for any organization. Expense is a part of nominal account. Yes. Cash is an real account. Building is an asset is an real account. Goodwill is an asset, it is an real account. So bank is an personal account. Trademarks is an intangible asset. So intangible asset, so it is an real account. So we have 4 real accounts, that is cash, building, goodwill, trademarks. So 2, 3, 4 and 6. Sai Sagar, no man. So I don't know why you have got confused. Bank is not an real account, Sai Sagar. Bank is an personal account. That's okay. That's okay, Sagar. Okay, good. Bushra, very good. Very good. So Sherin Madani. So option C is the right mark. Acid test ratio. Acid test ratio is also known as quick ratio. So you guys know quick ratio is nothing but quick ratio is equals to quick assets by current assets, or current liabilities, or quick assets by quick liabilities. If bank overdraft is given, kindly minus. Okay, if bank overdraft is not given, so formula is quick assets by current liabilities. Quick assets by current liabilities is the correct answer. Option C. Strain, very good, ma, very good. See, if A is opening stock, B is purchases, C is closing stock, D is cost of goods sold, then what is the correct equation? Very important question asked in the previous Delhi University entrance test and Pondicherry University also. Very important question. A is opening stock. So general thing is opening stock plus purchases minus, or wait a minute please, purchases minus sales is equals to, so whatever the opening stock do we have to add the purchases from the total value, we have to minus the sales, is nothing but cost of goods sold, or if you have any closing stock, kindly minus closing stock is equals to cost of goods sold. Wait a minute please. Yeah. So opening stock plus purchase minus sales minus closing stock is equals to, what is the value? Cost of goods sold. Okay. Now they have not given the sales, that's okay. Opening stock is nothing but A plus purchase is nothing but B minus closing stock. What is the value of closing stock? C is equals to D. Okay, so try to understand from this equation A minus C is equals to D. Here it is a plus, if it go for the right side it becomes minus B. So A minus C is equals to D minus B. So A minus C is equals to D minus B. Option C is the right answer. So guys, Is it okay? Are you understanding? So option C, Akshay, very good. Bushra, very good, ma, very good. So guys, do you have any doubts regarding this equation? A very general equation. So whatever the opening stock is nothing but previous year's closing stock. The opening stock, whatever the opening stock we have, so from the apart from opening stock, whatever the items that we have purchased during the year, we have to add. So that is nothing but opening stock plus purchase is nothing but available stock in the hand to sale proceeds. So from that stock we will be selling some kind of what is it called as some part of stock, and from that, in that part, if any closing stock, just deduct the closing stock. So whatever the amount that we have, like yes, so that is nothing but cost of goods sold. Guys, is that okay? Guys, are you okay? Yeah, moving forward to the next question. So what is this pooling of interest? Pooling of interest is a method of what? Pooling of interest. Have you heard any time the method of pooling of interest? Students, respond. Have you heard any time about the pooling of interest? What is this pooling of interest? I think you might have heard in the corporate accounting subject. Corporate accounting. Sadal, welcome to the session. So we are just waiting for the responses. So have you went on amalgamation? Krishnatha, welcome to the session. So in the amalgamation, generally we have two types. One is amalgamation in the nature of merger, amalgamation in the nature of purchase. Sir, how can we notify whether it is an amalgamation in the nature of merger, or how can we consider it is an yes, whether it is an merger or it is a purchase? Merger or purchase. So we have 5 conditions. If it satisfies the 5 conditions, all 5 conditions, it will be the merger. If it do not satisfy any one among the 5 conditions, it will be the purchases. If it goes with a purchase method, the accounting will be the purchases method. If it go for the merger, it will be pooling for interest or pooling of interest method. So it is an accounting of amalgamation. It is not the calculation of purchase consideration. We do not have things like pooling of interest. Pooling of interest is purely an accounting of amalgamation. That's okay, Bushra, very good. Adding together or combination of 2 or more organizations together to run a common business. So I hope you have understood, right? Yes. So expenditure which results in an increase in earning capacity of the business. Is called as what? Try to understand. Here we have expenditure is said, which results in increasing in the earning capacity. Increasing in the earning capacity of the business. Yes. Sai Sagar, purchase is nothing but acquisition. No, man. The concept of acquisition is totally different and the meaning of the word purchase is totally different in terms of accounting of amalgamation. No. Purchase and acquisition, there is no internal or integral relationship among both two. That's okay. So try to understand which results in increasing in the earning capacity. He is speaking about increasing in the earning capacity. So for example, this is a very basic question. Why you people are doing mistakes in this question? I do not understand. Bushra, Moni. So why you guys? I don't understand. Making a silly mistake over here. So try to understand. Whenever any expenditure incurred, for what? Yes. Expenditure, whatever the expenditure incurred to increase the earning capacity is nothing but it is a capital expenditure. See, for example, a machine was purchased in the year 2001 and in 2020 a major repair has been happened and the machine has went to what is it called as a big repair. Like what happens whenever the expenditure incurred towards machine, right? Expenditure incurred to the machine, what happens? We are incurring this expenditure to machine, automatically what happens? Earning capacity will increase. Earning capacity increases, isn't it? Earning capacity increases. So it is like what happens? It is a capital. Whatever the amount that we are investing towards an machinery to increase the earning capacity is nothing but capital. So it is a capital expenditure. Bushra, is that okay? Moni, good. Shri, very good, very good. Guys, is that okay? Yeah? Yes? So try to understand. Harshita, okay, that's okay. Kindly subscribe the channel and tap on the bell icon for the more updates. Tap on the bell icon for the more updates. Premium received on issue of shares or debentures. So premium issue of shares is nothing but for the part of capital, isn't it? To acquire the capital, to get the capital to run the business, we will be issuing the shares. So out of capital, whatever the premium is nothing but again it is an profit, isn't it? So both includes it is a capital profit. Yes. Share premium is shown on the liability side in the balance sheet under the head what? Yes. Share premium is shown on the liability side in the balance sheet under the head reserves or surplus. See, whatever the premium that we receive out of the share capital, it will be treated as an reserves and surplus. Is it okay? Sandhya, good. Current ratio of company is 2:5. Its current liability is rupees 3 lakhs. What is the net working capital for the business? Try to understand. Yesterday we have discussed the same question. So current ratio is nothing but current assets by current liabilities. So what is the value they have given? 2:5 is nothing but 2 by 5. So just cross multiply. 5 into current assets is equals to 2 into current liabilities, isn't it? So now current assets is equals to 2 into current liabilities divided by 5. 2 by 5 into CL, isn't it? Now CL. So current liabilities is 3 lakhs. So yeah, try to understand now. Current assets is equals to 2 by 5 into what is the value of CL? 3 lakhs. 60,000. So current assets is nothing but 1,20,000. So now net working capital is nothing but current assets minus current liabilities. So what is the value of current assets minus current liabilities? So current assets is nothing but 1,20,000 minus what is the value of current liabilities? Current liabilities, it is 3 lakhs. So minus 1,80,000 is the correct answer. Minus 1,80,000. So see, try to understand option A. It is a bracket we have. So it is minus 1,80,000. Option A is the right answer. Yes. Very good. Very good. Very good, Bushra. So company invited applications for the subscription of 5,000 shares. Applications received for 6,000 shares. Shares were allotted on pro rata basis. If 180 shares are allotted to the Ram, how many shares would have been applied by him? Oh, B. Good, good. So now try to understand. A company invited applications for a subscription of 5,000 shares. 5,000 shares. Applications received were 6,000. For 5,000 shares, they have received the amount for 6,000. So what is the ratio? That is nothing but 5:6. So for every 6 shares, they have allotted 5 shares. Yes. So now try to understand. If 180 shares were allotted to Ram, 180 shares were allotted to Ram. So what is the value? Just so 5 by 6 is equals to 180 by question mark. Now cross multiplication. 5 into question mark is equals to 6 into 180. Question mark is equals to 6 into 180 divided by 5. So 5 ones are 5, 36 are. So question mark 6 into 36 is nothing but 216 shares. Yes, very good morning Sahadal, Bushra, very good. Bushra, you got confused, but okay. Guys, next. Experts is a running business of A for rupees 1 lakh 12 lakhs. Try to understand. 12 lakhs X purchased. Purchased, sold for 12 lakhs. 12 lakhs. In the place of cash, he discharged the purchase consideration by issue of equity shares of rupees 10 each at the premium of 20%. So 10 rupees share plus 20% premium is nothing but 10 plus 2, which is 12. Isn't it? 12 rupees. So 12 rupees each share. So find the number of shares to be issued. See, nothing but try to understand. 12 lakhs by 12. Nothing but 1 lakh shares. Option C is the right answer. Yes, I hope you have clearly understood, guys. Okay, so